We're back with our special virtual town hall, America Works Together, answering questions from you, the viewer, who's just trying to survive through all of this. Your questions have been fantastic, folks, and we want more of them. Right now, I want to get back to our panel in a moment, but first, let's bring in National Economic Council Director and White House Economic Advisor, Larry Kudlow. Welcome to the show, Larry. We've got a ton of questions from you from very worried business owners, parents, and just folks who are trying to survive to better times. But before I get to them, this morning, the Federal Reserve announced $2.3 trillion. They're going to pour that into the economy, huge loan program, in addition to the trillions that have already been pledged. And so how does this help the economy? More specifically, Larry, how does it help small businesses?
Well, okay, this is the medium business. I think it's called the Main Street Lending Facility. I think that's what the Fed has termed it, and it's going to be big dollars. I don't know all the parameters yet. They haven't laid out all the parameters. They're still working with the Treasury. But just one thought here at the top. President Trump wants every small and medium business, particularly the small business, but now we have the Fed backup. Everybody who wants a loan to stay in business, to keep their payroll intact, to cover expenses, everybody who wants one is going to be able to get one. That is our goal. We want all the small business and the medium business to get loans. Those are, as you know, from the banks, but they're going to be government guaranteed loans. And if you hang on to your payroll, Charles, the loans will be forgiven after a period of time. But that's the essential message. We want to keep you in business. We know just how difficult this is. We know the hardships are enormous. We are in a contraction because of the virus. The good news here, at least at the margin, is that the mitigation efforts seem to be bearing fruit. The numbers are enormously improved. Let us hope we can reopen this economy in the next 4 to 8 weeks, as I've said before. But right now, on regards to your first question, we just want everybody who needs these loans to get them. There's other people involved. Sure. We can talk about other aspects of the assistance program. We want folks to stay liquid with as much cash as possible, and we want to cover everybody.
Well, it's an admirable goal, and the speed in which you're trying to achieve this has never been done before. But there are a lot of questions on how to actually get it done. So I want to share some of them with you now, beginning with Christina L. She emailed and asked, why are banks requiring 15 months of payroll summaries along with 941 quarterly forms? The process was presented as quick and efficient to get approved, and no banks can give an answer as to what will happen. Why is this? Larry, a lot of people saying that banks are making this process too complicated, in part perhaps because while they take money from small businesses, they're reluctant to deal really and give loans to small businesses.
Well, Charles, look, I'm not the technical guy. I may not be able to answer these questions for specific banks, but I do want to say this. I mean, I've talked to some people that there are always startup glitches, but, you know, hats off to Secretary Steve Mnuchin and the SBA. They've done a great job in a very short period of time. I believe the banks are cooperating. I mean, I'll give you some numbers. I just talked to my great friend Monica Crowley over at Treasury. So far, as of 2 p.m. today, 500,000 loans have been approved, Charles. That's what, in a week? Less than a week? 500,000 loans, $128 billion worth of loans, and almost 4,000 bank lenders. Almost 4,000 bank lenders. So this thing is wide sweeping. It's a gigantic program. Right. And, you know, there are always going to be glitches. But the fact is, I don't want to blame anybody. I don't want to blame your caller. I don't want to blame the banks either, because everybody is working as hard as they can. President Trump met with leading community bankers and leading big city bankers just a few days ago. I was in the meeting, and we were grateful for their support. So everybody's trying to pull their oar right here.
There's no doubt about it. I think these questions are being asked out of desperation because the clock is ticking for so many people. When these loans are approved, typically do you have a time on how quickly they get out the door?
Well, that's a good question. And I think the intent of the program was more or less 72 hours, Charles. Now, I don't want to misspeak, and I don't want to put anybody, SBA or Treasury, in a bad spot. But I think a few days is supposed to be the norm when all the wheels are turning as we hope they will turn. Shouldn't be longer than a week. I mean, look at, we're getting the economic impact assistance, the Treasury, the direct checks, excuse me, we're getting those out probably a week before we expected to, so that's popping up. And I learned today also, Secretary Scalia over at the Labor Department, the plus up in the unemployment, the extra $600 in the unemployment benefits, that's come online way faster than we originally thought. I think that's coming online this week. We were worried it might take several more weeks. So these systems are working pretty good in a short period of time. And to people who are worried and have complaints, I would just say this. Just, go online to the SBA, go online to the Treasury Department, or if it's unemployment side, go online to the Labor Department. You will get answers. And I think another one, most of these loans are one-page forms. That's what I've been told by people who have gotten them. Maybe that's not true in every case, but that's what I'm hearing.
No, the forms are simple. I think the questions have been with the various different banks and their own rules, which, of course, is one thing to consider. Larry, I want to bring up my panel, starting with Brian Brimberg, who has a question for you about regulations. Brian.
Hey, Larry, more of a macro question for you here. When we look back to the economic boom that came just before all of this, it was driven by regulatory cuts and tax cuts. What we've seen lately is just a raft of government spending, unlike anything we've ever seen, and some rumblings that some of that could come with, more regulatory hurdles and more red tape for businesses. My question is, how do we get back to those pro-growth policies that we had before all this started? How do we avoid letting the regulation and the government spending continue to balloon once we get past the crisis?
Well, okay, I might push back a little bit, particularly on the regulatory front. I mean, I sit as a member of the coronavirus task force, and I know that we have deregulated a number of areas to expedite not only the development of vaccines and therapies and so forth, but also to get all the medical equipment in place, the testing, the masks, and all the others. Developing, the testing thing is coming along very nicely. We're working hard on that. I know the FDA is deregulated because some of the potential therapies are available or will shortly be available on an experimental basis. We've been working with that. There's a couple of key therapies. So I think certainly on the medical health care side, we've continued to deregulate. Now, look, as a longtime supply sider who believes in the incentive model of growth, I will tell you this. We have no choice but to try to cover as many folks as we can regarding things like cash and liquidity, and again, small business presentations and payrolls. Look, we are sending assistance out right now to roughly 175 million Americans. Okay, let me repeat, roughly 175 million. That is an enormous, enormous number for what will be a temporary program, because the virus itself is an incredible crisis, exponential crisis, but it will be a temporary crisis, and it will eventually abate. So that's what we've done, 175 million, and covering a very wide swath. I mean, look, for example, the small business payroll tax holiday, that's an incentive-driven program. I'm very proud of that. We've pushed back income tax dates. Instead of April, it's going to be June or July. Student loans have been pushed back because people need the liquidity. Folks who might have to go home because of the virus, or a family member has the virus, or the kids are home. So we've turned unpaid leave into paid leave. We've got to cover the unemployment. I mean, remember, this was not the fault of the individual. Right. This was not the fault of the business. This was the fault of a virus that virtually nobody expected, and certainly not, the skyrocketing exponential nature of it. So I'm just saying, all the tax cuts that President Trump put in place are still in place. All the deregulation measures that the president put in place are still in place. The freeing up of the energy sector, the better trade deals. President rebuilt and re-incentivized this economy. And as you noted, I think it was roaring in January and February going into the new year before the virus hit. That is still there. And that's why I believe, maybe I'm just an eternal optimist, but
right.
I believe once we get through this, and we will get through this, Lord knows, this economy will snap back very rapidly. People will be going back to work. Small business will be reopening. And, you know, new businesses will appear. New folks will come to the fore. That's what makes America so great. We are the most inventive, entrepreneurial country. All we're doing now, we're not changing the president's pro-growth policies. All we're doing now is trying to help ordinary Main Street, middle-income, blue-collar folks. We're trying to help them get by this. We're just trying to help them get some cash and liquidity, you know, to meet basic necessities, for heaven's sake.
And Larry, to that point, even today, Chairman Powell noted that this economy was a juggernaut. He talked about the firm footing, and that's one of the reasons he thinks our economy will be very strong, to your point, once we come out of it. The question, though, for a lot of these folks is building that bridge from here to there. And I want to bring in a question from Valerie H. About paying her employees. Let's take a listen.
Hello. In order to meet the requirements for loan forgiveness through the SBA, must I pay my employees for consecutive weeks? The funding is obviously going to take longer than expected, and we are having difficulty continuing to pay our employees without it. Can we stop and then start up again once we receive the funding? We've already paid them for 2 weeks since we had to close.
Larry, will there be forgiveness for rehiring employees?
Yeah, that's a good question. You know, I think the answer is yes. Okay, but Charles, again, I'm not the expert on every detail. I know we've given them a time frame where to begin, which I think was some point around mid-February, if I'm not mistaken.
February 15th.
Okay, well, I got one right. That's good. And I can't quite answer the consecutive argument. I know that generically speaking, 75% of the loan has to go to payroll. Now, does it have to go to consecutive payroll? I have to find that out for you. I will get back to you, and you get back to the caller. I think the answer is yes, but I'm not entirely sure.
Okay, and quickly on that 75%, that is a major beef with a lot of folks. If you have a business in New York, New Jersey, your rent might be 50% of your business. And these folks are saying, hey, you know what? I'm trying to keep the business open. Part of that means paying the rent. I would like to make this whole thing forgivable if I can retain my employees, but still only 55, maybe 60% of the money has gone through payroll costs. Could there be adjustments made for that?
You know, Charles, I think there's scaling in this. So those formulas, 75%, 25%, if I'm not mistaken, are adjustable. So the loan or the degree of loan forgiveness can be adjusted if there are certain exigent circumstances whereby they don't want to put 75% in. I'm almost certain there's scaling or prorating up and down. Again, I'm not the inventor of all these details, but I'm pretty sure. And I just want to come back to this point about President Trump's growth policies, which were such a great success. What we're facing now is just about, I've been around a long time, my friend, and I've never seen anything like this, but those growth policies on taxes and regulations and trade and oil and so forth, they don't go away. They're still the foundation of an economy that's been rebuilt and re-incentivized, and we're showing tremendous growth. What we're looking at here, I hope, will be a 2-month gap, interference, if you will, March and April. All right. In the next month or two, we should be able to restart, at least on a rolling basis. And our whole intent here is to try to relieve people of the enormously difficult hardships they are suffering through no fault of their own. And that's the thrust of our policy. And Charles, I don't know if that's supply side or Keynes. What I think it is good, common horse sense. Okay, that's anybody, I hope, would have done this. And I want to add one more piece to it, please. Marking the president's views, he is involving the private sector every step of the way. I mean, to the point made earlier about overregulation, this is a government-driven operation, but. We have used experts, retailing, pharma, biotech, banking. We've got manufacturers who used to produce cars, and now they're producing respirators and ventilators. You follow me? We are using the private. This is a public-private partnership. This is a public-private rescue mission to help folks who need help from circumstances, external circumstances, were no fault of their own. Nobody's ever done this before. This is not just another government operation. This is a partnership, and that's consistent with President Trump's own philosophy of the importance of a free enterprise economy.
I got to tell you, Larry, that's been one of the more amazing hallmarks of this, how quickly the administration was able to galvanize the private sector for their expertise while doing things that they couldn't do with the government and the government's checkbook. And again, the idea, I think, is it's all admirable. It's been amazing, without question. But for some of these folks, the idea is just how do we take advantage of this? How do we live through those next 8 weeks? I've got a question from Dave P. about his business. Let's take a listen.
We have a hair salon, and my problem is how do I incentivize my team to come back in to service guests when the stimulus package is benefiting them so well that they're not in a hurry to return. And in order to get the grants forgiven, we have to hire the employees back, which is going to be a challenge. So my question is, how do we get them back?
Larry, maybe unintended consequences, but unemployment benefits now averaging over $900. That's a whole lot more weekly than a lot of people were making. And so a lot of people are just saying, hey, let me go for the unemployment benefits, and that puts these small businesses in a heck of a jam.
I understand that issue, but, and I don't have a magic solution. Here's what I would say. We plussed up the unemployment benefits. That was part of a bipartisan deal, and it was important to go bipartisan. That plus up is 4 months. And, hopefully and prayerfully, this virus will be basically gone, and we will be closer to normal, what the president calls normality. So I think the small plus up in unemployment benefits will not interfere with incentives to work. I don't believe that. We had the most extraordinary increase in jobs and decline in unemployment across the board. As you know, I called it the blue-collar boom. Middle and lower middle income people were the biggest winners in the Trump economy up until a few weeks ago. I think when you look at things like the employment to population ratio, which had been rising, you look at the tremendous increase in female workers and minority workers and so forth. We've talked about this before. Those values and efforts are not going to stop just because we're trying to take care of folks for a couple of months. I really think if it were going on for years and years, that would be a big problem, and past administrations have made that mistake. The president understands the incentive model, and he understands it's got to pay to work. But just hear me on one additional point. I think, I may be wrong, Charles, and I can't prove this statistically, but I think in recent years, the extraordinary increase in jobs and employment has really made folks come back to work.
Millions.
It's like for a whole bunch of years, you could see it in the labor numbers. People didn't want to work. And I think, if I may, it's cool to work. Your neighbor, your brother-in-law, the guy down the street. Working has become cool again. If you looked, one of my favorites was the millennials, the youngsters. Their participation rates and their job increases were phenomenal before this virus came in. And you know me, I also think work is a virtue, and I think work is a godly virtue as well. But I believe it's been cool to work, and people are going to want to come back and work.
I agree. And as a small business owner myself, whose average employee has been with me 25 years, there's got to be a relationship, a special relationship where these folks understand what we're going through.
That's a great point. That's a terrific point. Right. Yeah. Yes, absolutely. That's the way our society works, okay? We take care of each other. You're exactly right, Charles.
I want to bring in a question from one of our panelists, Gene Marks. So, Gene, you have the floor.
Thanks. Hey, Larry. Thanks for coming on. And look, with all the trillions of dollars that's being spent right now, rightly spent by the administration, how will this get paid for? Will small business owners be expecting to see in the future much larger deficits, higher interest rates, higher inflation? Should we be planning for that? What are the plans to fund this?
I'm not sure I heard the first part of your question. I would say right now, the threat of inflation is nil. And rising interest rates, I mean, I suppose I'll deal with that when and if it happens. I mean, right now, those are just not issues. Right now, the issues are a sinking economy because of this virus, a terrible contraction, and deflation, not inflation. So I just, rates, I suppose, will go up at some future point, but I'm not even thinking about that right now. Here's what I would say. I believe you mentioned deficits. It wasn't coming through as clear in my ear. But look, I think the prudent business decision right now is to take advantage of record rock bottom interest rates and borrow some cash in the open market in order to invest in America, to invest in small businesses, to invest in temporarily unemployed people. In other words, to invest in those folks who have been badly hurt by something that was not of their own making. I think that is the prudent business decision. In other words, the low cost of borrowing is going to generate a high rate of return in terms of future growth and jobs and opportunities in the United States. That's the way I look at it.
Larry, final question, and again, I appreciate the time that you've taken with us, but we cannot talk about the coronavirus and not talk about China. I've got a question from John M.
What can we do to dramatically reduce, if not eliminate, our dependence on China? Would something like a Marshall Plan, in concert with our close allies, help us achieve such a goal?
Larry?
Well, okay. I don't want to pick on China right now. It's not high on my list. We are aware, the United States is aware of certain issues with China. We have engaged with them. We have a good trade deal the president negotiated with them, but there are issues. We'd like more American companies to come back home. We'll deal with that over a period of time, but we are engaged with China, and the president continues to enjoy a very good relationship with President Xi. As far as policies to get the companies home, there are a lot of things we could do. One of them, by the way, we don't have time to pursue it, Charles, maybe the next time. I would say 100% immediate expensing across the board. Plant, equipment, intellectual property, structures, renovations. In other words, if we had 100% immediate expensing, we would literally pay the moving costs of American companies from China back to the U.S. We would basically provide them with moving cost payments. That's one way. That's not the only item on the list, but I think 100% expensing would be a very good thing. And by the way, it would be a very good thing for American companies here at home. So that's just one pro-growth policy point.
Larry, I just cannot thank you enough. We really appreciate what the administration is doing. We understand this is a monumental challenge never faced by any president or an administration in the history of America. You guys are doing an amazing job. We appreciate your time, and we hope to hear from you again real soon. Thank you.
Thanks, Charles. Appreciate it.